Hello and welcome back to the Financial Freedom Show. If you're new here, I like to talk about personal finance, investing, and how to make your money work for you. In today's video, we're going to dive into the YieldMax TSLA Option Income Strategy ETF, otherwise known as TSLY. We'll cover what TSLY is, how it works, its performance, and whether it might be a good addition to your portfolio. Without further ado, let's get started. First things first, what exactly is TSLY? TSLY stands for the YieldMax TSLY Option Income Strategy ETF. It's an exchange-traded fund managed by YieldMax that aims to provide investors with income and potential capital appreciation by investing in Tesla Inc., otherwise known as TSLA, and utilizing an options overlay strategy. The primary goal of TSLY is to offer investors exposure to Tesla's stock while generating additional income through the use of covered call options. This unique approach can potentially provide a steady stream of income while still allowing for capital growth. Now let's talk about how TSLY works. When you invest in TSLY, you're buying shares of an ETF that holds Tesla stock. The fund's holdings are primarily focused on Tesla, which means that the performance of the ETF is closely tied to the performance of Tesla. In addition to holding Tesla stock, TSLY uses a covered call option strategy. This involves writing call options on a portion of the fund's Tesla stock holdings. By selling call options, the fund collects premiums, which can provide additional income. However, the strategy can also cap the potential upside of the stocks if they appreciate significantly. The combination of equity exposure and options income can help enhance the overall yield of the fund, making TSLY an attractive option for income-focused investors who are also bullish on Tesla. Let's take a look at TSLY's performance. Since its inception, TSLY has provided a unique way to invest in Tesla while also generating income through the option strategy. However, it's important to remember that past performance is not indicative of future results. One of the advantages of investing in TSLY is its competitive expense ratio. The expense ratio for TSLY is currently around 0.85%, which is relatively high compared to broad market ETFs, but reasonable given the fund's active management and option strategy. Additionally, the covered call strategy can help reduce volatility. While it may be appealing to investors seeking a smoother ride while investing in a high growth and potentially volatile stock like Tesla. Now let's discuss the benefits of investing in TSLY. One of the main advantages is the potential for enhanced income. The covered call strategy can generate additional income from the premiums collected, which can be especially appealing in a low yield environment. Another benefit is the exposure to Tesla, one of the most innovative and high growth companies in the market. By investing in TSLY, you can participate in Tesla's growth while also generating income through the option strategy. TSLY offers a unique approach to risk management. The covered call strategy can help mitigate downside risk during market corrections, providing a level of protection compared to holding Tesla stock directly. Lastly, the active management by YieldMax's experienced team can provide peace of mind for investors looking for a well-managed income-focused ETF with exposure to Tesla. While TSLY has many benefits, it's also important to consider the many potential risks. The covered call strategy, while generating income, can cap the upside potential of the fund's holdings. If Tesla experiences a strong bull market, TSLY will underperform compared to just holding Tesla stock directly. Another consideration is the concentration of risk. Although TSLY is diversified in terms of its options strategy, it is still heavily focused on one stock, which is Tesla. This concentration can increase volatility and exposure to company-specific risks. Lastly, the use of options can introduce additional complexity and potential tax implications. Investors should be aware of these factors and consider their own risk tolerance and investment objectives before investing in TSLY. So, is TSLY the right investment for you? It really depends on your financial goals, risk tolerance, and investment strategy. If you're looking for exposure to Tesla with the added benefit of income generation, TSLY can be a great addition to your portfolio. TSLY is especially suitable for income-focused investors who are bullish on Tesla and comfortable with the many risks associated with covered call strategies. However, if you're seeking a more diversified approach, you might want to consider combining TSLY with other sector or broad-based ETFs. In conclusion, the YieldMax TSLA Option Income Strategy ETF, otherwise known as TSLY, offers a compelling way to invest in Tesla with the added benefit of income generation. With its unique covered call strategy, exposure to Tesla, and active management, it can be a valuable addition to many investment portfolios. Here's a few final tips before I go. Number 1, always consider your risk tolerance and investment goals before choosing an investment. Number 2, understand the implications of the covered call strategy and how it may affect your returns. Number 3, diversify your portfolio to balance risk and return. Number 4, keep an eye on the performance of your investments and make adjustments as needed. If you found this video helpful, please be sure to give it a thumbs up. And don't forget to subscribe for more personal finance and investing tips. Leave a comment down below if you have any questions or if there's a specific topic you'd like me to cover in a future video. Thanks for watching, and I'll see you next time.